What's up YouTube? It's Louis here. We're looking at Quant on the daily time frame. What is going on with Quant? Now guys, of course we've been looking at two key levels. Ignore all of this for now. We're looking at the left. Look to the left, structure leaves clues. When you're looking at the chart, you must always say this. This is something that I came up with myself. Look to the left, structure leaves clues. That is what's going to tell you not what's going to happen in the future, but the levels you should look out for in the future. Now, when we first came into this zone, we felt a psychological level as resistance, $175, a nice round number. And then also, once you rejected that, you fell to support. What was your support? $150, exactly a nice psychological round number. Now, of course, you broke out of resistance, back tested that as support, and you've continued. And of course, once you made a base over here, you lost that base, and it would make sense to say if you lose support, you go to the previous one. Now, the previous one was down here, and that's why we came to that level. Now, of course, once you came to this level, you had a little fake out over here to retest these highs down here, and this, of course, and this support over here before getting back up. This is just like short term. These are your main, your strongest key levels of support and resistance. But of course, there's support and resistance in between, like this line over here, for example. You can see support, resistance, a little area of support and resistance, and just like you're finding a little support over here in between. Now, they're not the strongest, and that's why they can be lost very easily. But the two strongest ones are, of course, these two massive white boxes that I've drawn out for you guys. And this over here was a fake out. You got back above, held that support, and lost it. So when you do that, you should go to the previous down here, 150, and you couldn't. Why? Because we started to form an ascending triangle. You can see through this point, support, support, and support. Three separate occasions. Of course, you've had wicks going through it, but three exact taps of support, and you got your resistance point here on the daily time frame. So a daily double bottom, a daily ascending triangle, something we've been waiting for on this channel for a long while, ever since we started pumping, ever since we started dumping and then pumping. We have been expecting a double bottom. Now, of course, when you printed a high low here, it was looking amazing for continuation. It looked like some sort of double bottom, but in the end it became an M. You can see that, an M. And usually when you're forming a W, the M is like the neckline, basically, because you're just like coming to the neckline once, failed to get above it, trying to break above it again, and you like confirmed it as your neckline, basically. And it's one bottom, two, and then break out above that neckline that you've now created, $205. Now, of course, this ascending triangle is a new one. I think my last one was something like this, but I've redone it now, and you have a new technical target. Instead of it being $248, it's now sitting at roughly $260, and that's if we break out to the upside. Of course, might be wrong completely, and if you were to lose support now, let's say there, you would have a technical target back, basically filling in this wick. But I don't believe that this will happen. I do believe in the first scenario that we will go and break, obviously, upwards. Now, if it were to break downwards, that's because of Bitcoin breaking down. So for me, it's all on Bitcoin to do the work, and we know this anyway because Bitcoin is the mothership. Now, of course, with an ascending triangle, it's bullish. Now, how do we start heading back up to this resistance point? We need to work that out today in this update. First, I'd like to get above $175, and we'll look at this closer on the 4-hour time frame now. We have measured from the swing low to the swing high over here. You almost retraced 100%, very slightly off, and then you bounced to that 786 area, and you've held it as resistance. You turned the 618 from support into resistance here. So what should have happened is obviously come down to here, which is what would happen anyway. That's your next support, but you should have lost this support, and you keep failing to lose this support. So we're kind of forming some sort of double bottom here itself. One bottom, neckline, just like we said at that larger one. The neckline is usually an M pattern, one top, two, come down for the second bottom. In this second bottom, you're also falling another double bottom. This is something we always say on the channel. First bottom, you get a W in it. Neckline, M pattern. Second bottom is a double bottom again. Can you see that? W, M, W. So it's very confusing. I understand that, guys, but you would have known that this M pattern, I think we already checked it, that target was met. This double bottom target was not met. You broke out, came back in, held that neckline, coming in for the second one. So we can draw another neckline over here. Once this breaks, basically, it's like your signal that we're going to come up to this one and break that, because I think its target would take you above that. Yeah. Slightly. So it could be that it actually results in a fake out Doesn't necessarily mean just because the target's above it, we're going to continue. It just means that we could wick up and come back down for support, then break it, and then on to the next technical targets. I haven't even given you the other one, have I? So I'll measure it up for you now. Put it on the break. Yeah, so that would be a target, roughly 177. This swing high over here, or this previous high, let's say, over here. You would start retracing once you break this high to this one up here, $185. And that's how we're basically going to get to 200, because the first step is getting above 175. That's our target out of this double bottom. But you see, when you come up to here, obviously you can get rejected, probably will fall back for support, but then you're starting to form another larger double bottom with this as your neckline. And this is basically how we're going to get to the top over here once we break that one. Once we get up there, most likely, so up here, we're most likely going to get rejected. Wherever those EMAs are sitting at that time, don't know where they will be sitting, but we'll fall back to the EMAs. And then if they can hold, we'll try and break this 205 resistance with a $260 technical target for Quant. So that's pretty much it for today. Of course, if you do lose to 786, we're coming to the $157. That would be falling out the ascending triangle, and basically we would continue down to the downside. Your technical target, if we were, as we've been calling on the channel, is $1,618, but we do always look at these two as well, because you could get bounces off this. And if you can confirm the one as support, as long as you're above the one, you won't see any further downside. So what could happen is that you could actually roll over here. If you get a tap off the one, get back above, hold that support. That's like the best case scenario if you are creating that reversal wave, basically. But at the moment, you're not. Still above the 786, forming some sort of double bottom on it, and that's what we're anticipating next, continuation to the upside. But we're ready for both ways, basically. Please like the video, subscribe, and I'll catch you guys in the next one. Peace.